Hey everyone, and welcome back to the Deep Dive. Today we are going to be doing, well, a deep dive into Bitcoin. More specifically, trying to figure out its intrinsic value.
Yeah, that's a tough one.
It's not quite as straightforward as, say, a stock where you can look at the company's assets and profits, right?
Exactly. It's a whole different ball game with Bitcoin. You got to look beyond those traditional financial metrics.
So where do we even begin with this?
Well, the source material we have, it's an excerpt from an analysis titled Valor Intrinsico de Bitcoin, un analysis completo.
Which means,
Right. The translation is intrinsic value of Bitcoin, a complete analysis. Anyway, it really gets into the weeds on this, so we should be able to get some good insights.
sounds good. So the source starts by comparing Bitcoin to gold, pointing out that both are finite resources, right? I mean, there are only 21 million Bitcoin that will ever exist.
Yep, that's the hard limit.
So does this scarcity alone contribute to Bitcoin's value?
Absolutely. It's a cornerstone of, the whole digital gold narrative. See, unlike like government-issued currencies like the dollar, which can be printed endlessly, Bitcoin has a fixed supply. And this creates a deflationary effect.
Deflationary how?
Well, as demand grows, but the supply stays the same, it puts upward pressure on the price, just like we see with precious metals like gold.
Okay, that makes sense. But I imagine it's more than just a numbers game. I mean, doesn't the effort involved in mining Bitcoin play a role?
Oh, absolutely.
All that energy and resources that go into it?
Right. It's often seen as setting a sort of a floor for Bitcoin's
A
price.
floor.
Yeah, basically like a minimum.
Yeah.
The source gives this example. If it costs, say, $20,000 to mine one Bitcoin, then miners are unlikely to sell it for less than that, right?
Makes sense. They'd be losing money.
Exactly. It's supply and demand. But here's the interesting thing. The difficulty of mining Bitcoin adjusts automatically. So as more miners join the network and compete for those Bitcoin rewards, the difficulty goes up. It requires even more computing power and energy to mine.
Wow. So the system is designed to maintain this balance between effort and reward.
That's exactly right.
But wouldn't that discourage new miners from entering the market if the difficulty keeps rising?
It's definitely a dynamic system. The price of Bitcoin, the cost of electricity, the availability of, efficient mining hardware, all these things come into play when a miner is deciding whether or not to participate.
Yeah, that makes sense. This whole mining process is incredibly complex, though. But what about security? I mean, how do we know that the system itself can't be manipulated?
That's where the blockchain and the proof of work consensus algorithm come in.
Ah, yes, the blockchain.
Think of it like a decentralized public ledger. Thousands of computers worldwide maintain this ledger, right? And miners, they're constantly competing to solve complex cryptographic problems. And that allows them to add new blocks of transactions to this ledger.
So it's not just about generating new Bitcoin, they're actually verifying transactions and securing the entire network.
Yep, exactly. And because the network is so decentralized, it's virtually impossible for any single entity to control and manipulate it, which makes Bitcoin, resistant to censorship or government interference.
And it's this decentralized nature that makes it appealing to people in countries with, say, unstable currencies or strict capital controls, right? The source mentioned Venezuela and Argentina specifically.
Exactly. In those situations, Bitcoin can provide a more stable store of value than the local currency, and it's much less susceptible to government manipulation.
Right. So while Bitcoin's volatility might make it impractical for everyday purchases, its utility really shines in these specific contexts. It's like a parallel financial system emerging.
You could say that, yeah. And we're even seeing this adoption happening at a national level. Look at El Salvador, for example. They made Bitcoin legal tender. That was a pretty bold move.
That was huge, yeah. I mean, it signaled a growing acceptance of cryptocurrency. But I remember there was also a lot of debate about the practicality of it all. Would it actually benefit the average person in El Salvador?
It's still early days, too early to tell what the long-term impact will be. But it's an interesting case study, as we try to understand the broader implications of cryptocurrency adoption.
Yeah, for sure. And speaking of broader implications, we haven't even talked about Bitcoin as a hedge against inflation. That seems to be one of the major arguments for its value, especially with all the economic uncertainty in recent years.
Definitely a hot topic. The basic idea is that because of its fixed supply, Bitcoin is resistant to inflation. Unlike those fiat currencies, which central banks can print endlessly, right?
So the thinking is that as governments print more money, potentially devaluing their currencies, Bitcoin's relative scarcity could make it more attractive, like a digital gold in a way.
That's the analogy a lot of people make, yeah. But Bitcoin is still a relatively new asset. We still don't know for sure if it will be a viable inflation hedge in the long term.
Okay, so we've got scarcity, mining costs, decentralization, real-world use cases, and the potential to be an inflation hedge. That's quite a mix of factors contributing to Bitcoin's value.
And we haven't even gotten into the more intangible aspects yet, like the narratives and social perceptions surrounding Bitcoin. Those play a huge role in shaping its value, too.
I'm definitely intrigued to explore that further. It's fascinating how something as intangible as perception can actually influence something like value.
It's pretty wild when you think about it. It reminds us that even in finance and technology, human psychology and storytelling, they have a huge impact.
Yeah, it's amazing how Bitcoin really challenges our traditional idea of, value. We talk about those tangible factors like scarcity and mining costs. But you also mentioned these intangible influences.
Right. Right. It's like perception,
Yeah.
the stories we create around something that can
Now,
have a real impact on what we think it's worth. And Bitcoin, well, it's got some powerful narratives attached to it.
let's delve into those. The source mentions this digital gold narrative. Just how strong is that connection between Bitcoin and gold?
Oh, it's a popular one, that's for sure. Both are seen as scarce resources, right? Both are hedges against inflation, stores of value. Gold has held that role for centuries. Bitcoin's trying to do the same thing, but in the digital world.
But some would say that gold has this intrinsic value because of its uses, Beyond just being a financial asset, jewelry, electronics, even dentistry, does Bitcoin have utility like that? Beyond, just speculation.
It's true. Gold has a longer history, broader industrial applications. But Bitcoin's utility lies in its ability to facilitate transactions, especially where traditional finance just, doesn't cut it.
Like in Venezuela, Argentina, places like that. But are there other real-world uses besides just getting around hyperinflation?
Of course, think cross-border payments. With Bitcoin, you can bypass those traditional intermediaries like banks, potentially making international transfers faster and cheaper.
So for global businesses or people sending, say, remittances, Bitcoin could be a big advantage.
Yeah, exactly. And it's not just about efficiency either. Bitcoin offers censorship resistance, which traditional systems lack, right? No single entity can control the Bitcoin network, which appeals to, well, anyone who distrusts centralized authority.
So we have this digital gold narrative, financial freedom, censorship resistance. All these things feed into Bitcoin's appeal and ultimately its value.
It's like a mosaic of perceptions, and those perceptions are shaped by, the growing adoption we're seeing.
We've talked about El Salvador making it legal tender. Any other indicators of mainstream adoption that could impact its value?
We're seeing big companies like Tesla, MicroStrategy, Square, all investing in Bitcoin. Payment platforms like PayPal, Square, they're integrating it into their services. Even traditional financial institutions, they're starting to explore ways to offer Bitcoin-related products.
So even with the volatility, there's this growing sense of legitimacy around Bitcoin.
It seems that way, yeah.
But how do we square that with, concerns about the environmental impact, all that energy consumption from mining?
It's a valid concern, no doubt. The proof-of-work consensus algorithm, that's what underpins Bitcoin's security. It's energy intensive. And as the network grows, as mining difficulty rises, the energy demand goes up too.
So there's this potential tension between Bitcoin's environmental impact and its long-term sustainability.
The crypto community is grappling with that. There's this push for sustainable mining, using renewables, research into other consensus algorithms that aren't as energy hungry.
Sounds like a lot of innovation happening. Not just the tech, but also addressing the real-world impacts. But with all this progress, how do we actually put a value on Bitcoin? Those traditional financial models, they don't seem to fit.
Right. That's why we've seen these alternative approaches pop up. The source mentions the stock-to-flow model, or S2F.
I've heard of that. It's about scarcity, right?
Yeah, exactly. It compares the existing Bitcoin, the stock, to the flow of new coins being mined, basically trying to quantify scarcity and predict future value based on that.
But wouldn't that just mean the price keeps going up forever
Yeah.
as it becomes more scarce? Seems a little too simplistic, no.
Yeah, you got to be skeptical. The S2F model has its critics. It relies on past data and assumptions that, well, may not hold true in the future. Scarcity doesn't automatically equal value either.
There has to be demand.
Yeah.
People need to want Bitcoin.
Absolutely. And that's where Metcalfe's law comes in. It's all about the network effect, the idea that a network gains value as more people use it.
Like social media, right? The more users they have, the more valuable they become.
Yep, that's the idea. As Bitcoin adoption grows, its utility increases, which leads to more demand and potentially a higher price.
But isn't that kind of circular? Price goes up because more people use it because the price goes up, like a self-fulfilling prophecy.
There's an element of that, sure, but it's also about building a strong ecosystem. As more businesses accept it, developers build on it, users engage with it, the network as a whole becomes more valuable.
Then there's that energy cost model,
Yeah.
tying Bitcoin's value to, well, how much it costs to mine it. Seems pretty straightforward. More energy to mine it, more valuable it should be.
That's the thinking, yeah. Those who like this model, they say the energy invested represents a real-world cost that should be reflected in the price. It's a fundamental measure of its worth.
But we talked about those environmental concerns. Wouldn't that, limit how much energy can be used for mining, undermining this
Yeah.
whole model?
It's complicated, yeah. The energy cost model doesn't really account for the environmental side of things, or the shift towards more sustainable mining.
So every model has its strengths and weaknesses. None of them really grasp the whole complexity of Bitcoin's value.
That's the challenge. Bitcoin is so new, so multifaceted, we need a more holistic approach to valuing it.
We've looked at the tangible, scarcity, mining costs, real-world uses,
Yeah.
and the intangible, narratives, social perception. Bitcoin's value comes from all these things interacting.
And don't forget the psychological element, what people believe, their hopes, their fears about the future. That all plays a part in how they value Bitcoin, too.
It's like this social experiment unfolding in real time. We're watching a new asset class being born with all its uncertainties and possibilities. I mean, it's crazy to think about. Belief, something so intangible, can actually move the price of Bitcoin like that.
It says a lot about how we define value, right? It's not always about some inherent quality. Sometimes it's just what we all agree something is worth.
Our source, Valor Intrinsico to Bitcoin, on Analysis Completo. It really gets into that, how the tangible and intangible, they all mix together.
It points out how Bitcoin, the whole idea of its value, it's changing all the time. As the tech gets better, more people use it, the stories around it change too.
And we've been through those different models, right? Stock to flow, focusing on scarcity.
Yeah.
Metcalfe's law, which is about network effects. But none of them seem to tell the whole story.
Because Bitcoin, it's hard to put it in a box. It's digital money, it's a payment system, it's a store of value. For some, it's like a movement even.
So many signs to it.
Yeah.
It makes it fascinating, but also tough to wrap your head around.
Yeah.
But let's go back to that inflation hedge idea. That's a big one.
Right. Bitcoin, with its limited supply, it could protect you from inflation. That idea is really powerful, especially when the economy is uncertain, like we've seen.
The source pointed out how when central banks were printing tons of money, quantitative easing, interest in Bitcoin shot up, investors wanted something else to protect their wealth.
Makes sense, right? If you think the dollar is losing value, you look for stuff that's limited. Bitcoin, gold, things like that.
But some say Bitcoin, it's too volatile, up and down all the time. More of a gamble than a safe haven.
The volatility is there, yeah. But Bitcoin's still young. As more people use it, market settles down, we might see that volatility ease up.
Like the internet, early days. Lots of hype, speculation, but it became part of life, and its value, it kind of stabilized.
Good comparison. Bitcoin's still developing, lots of innovation, price swings. But as it gets used more, businesses accept it, institutions invest, its value proposition, it becomes clearer.
Almost like a new financial system being born. One that's decentralized, transparent, maybe even fair.
That's the hope. But there are hurdles, right? We talked about mining's impact on the environment, needing clear regulations, potential for misuse, too.
Every new tech, there's good and bad. We got to figure it out, shape the future we want.
And that's why these conversations are so important. Understanding Bitcoin, how it gets its value, helps us make better choices. For ourselves, for the world.
So what's the bottom line? What is Bitcoin's intrinsic value? Doesn't seem like there's an easy answer.
Nope, not really. No single number, no perfect model can sum it up. Its value reflects tech, economics, what people think, even our hopes and fears about the future.
It's a story that's still being written. And maybe the best lesson from this deep dive is there isn't one answer. It's about embracing the complexity, keeping on exploring.
Exactly. We're just at the beginning of understanding Bitcoin, and it's a journey worth taking.
It really is. Thanks for joining us on this deep dive into Bitcoin's intrinsic value. Hope you found it interesting, maybe even sparked some curiosity to keep learning about this crazy world of cryptocurrency.